Good afternoon, dear traders. This is Alex Gerchik and the company, Gerchik Company. And today we're going to have our stock market analysis. So you'll figure it out what exactly we do. I trade for almost 20 years. Next year it's going to be 20 years that I'm in trading. So I really do know and understand what I'm talking about. I'm going to go straight into charts. So we're going to go one by one, a few stocks just to figure it out. What do we have? A very interesting scenario right here in the corner. You can see the name of the company. It's ZOES, Zoe's Kitchen. I tell you honestly, in the last 20 years, I figured out one thing. I'm not trying to get very deep into details, what the company do, what their fundamentals, most of the time on chart, there's everything. So you can figure it out pretty much just by looking for the chart. Okay, what do you have in this case scenario? Stock used to be like $40-something a share very recently, less than a year ago. It's right now trading at 16, so it's minus 60%. What do we have today? Take a look. After gap, we went straight down, but the most important thing right here, what do we have? Stock went down from 22 to $16.50 a share, so about $17 a share. Right now, as you can see, the stock is trying to consolidate, but somebody is really holding the position. I mean, right here, you see, stock cannot go any lower. It's trying. So very important thing in this case scenario, it's to figure out what is going to be at the two very important levels. The level number one right here is the 1760 per share, and the level number two right here is about 1645. But the most important thing is not only to know the level and to know the prices, it's to figure it out what and how the stock is going to behave. I mean, take a look. Every time the stock comes to that level, to 1750, it's pulling back. You see? Let's see how limit order works right here. High 1745, high 1749, high 1744. Take a look. High 1745 and high 1745. So you can figure it out. One thing that's around 1750. There's a seller with a limit position who is trying to sell every time the stock goes there to that particular level. Very important thing to figure it out. Not only like a time and sales or anything else. Is to figure it out. Is there a buyer in a stock or a seller in a stock? Most of the time, most of the people who teach trading, they don't understand anything about buyer and the seller. They're trying to show you some kind of pattern scenario. No. That's not an answer. The answer is you have to figure it out how the stock behave at the very important levels. How is anybody buying or anybody selling? In this particular case scenario, you can see very important level to figure it out is around 1750. We're going to have to see it, how the stock behave, what kind of volume, and what's going to be. If there is a breakout at 1750, a regular breakout, the stock can easily go to $20 a share, which is very good with a little stop, which is very important. But if you see the around 1750, the company is basically, the stock is doing false breakout, like it broke 1750 and it's coming back. That's it. One thing for a fact, the stock is going to get slammed. It's going to go straight back to 1650 and then it's going to go lower. Because if you're going to take a look at a weekly chart, see? It's the ex-IPO. In 2014, the stock was an ex-IPO, and right now, very important thing, you see, it's holding at the low side of the level. So right now, the stock is basically in not in a very good position. So very important thing to figure it out, how the price is going to behave itself around 1750. The next company we'll talk about with you guys, it's RUDI, R-U-D-I. The symbol, the name of the company is Rubicon Project. Very important thing. Take a look. There's a huge seller in the stock, huge, humongous seller. Take a look. Every time when the stock is going down, it's not pulling back. So obviously, something is really bad about the stock. It does not do any pullbacks. Take a look. No pullback. Gap down, no pullback, just a little maybe pullback. Right here, take a look. Pullback, zero. You see? Gap down, and right here, the stock is trying to concentrate. So one thing for a fact. There was a lot of short sellers, obviously, when the stock is going down, it's obviously a lot of short sellers, especially hedge funds. Mutual funds, they cannot short, but the hedge funds, they can short, no problem. So probably it was a lot of hedge funds, you know, who is shorting the stock. If you take a look at the volume, there's the only way right here, volume, when the volume is up. What does it show to you? It's only right here, the buyer, I get out. The buyers are out of the positions, no one else. The sellers is still there, but the buyer is out. For one simple reason, why such a big volume? Because the buyer who was buying the stocks, they get it out, they cannot control any more pain. Because the volume usually, it's accumulating from a two positions. Somebody is shorting, somebody is getting long. So in this particular case scenario, it's, you can see right away the buyer is out. So you have to figure it out what's going to be next in this particular scenario. I mean, you know, there's a low side of the range is a 535, and a high side of the range is 575. Only if the stock is going to break 575, there's a slight chance it can go back to $7 a share, because of the some short sellers who still in the stock is basically definitely going to try to cover their short position, 100%. So in this case scenario, you have to figure it out how the low side of the range is going to hold. I mean, either going to be able to hold for the stock or not. As you take a look before, in every single box, there's approximately the same volume. So if somebody is, you know, buying a certain amount, that right now, if the buyer is there, he has to show that the E is there. That's a very important thing. Just for you to understand that the buyer is there, it's not enough. You have to figure it out that the buyer is really there. For now, you cannot see the buyer is there. If, for example, it's going to pull back a little bit and then go up, you know one thing for a fact, there is a buyer. So you have to watch out until the buyer is going to show he is accumulating the position. The name of the stock is RUBI. Let's go to other stocks. In this particular case scenario, I don't even look for the stock because, you know, it's a very low volume, but, you know, volume is trying to accumulate. The volume is very low. Take a look. Very low volume. 15,000 shares. Take a look. A day before, 47,000 shares. This is very, it's not a good stock to get in for one simple reason, because it's very easy to manipulate with this kind of stock. With a $40,000, you could practically do $50,000. You could practically do anything. So in this particular case scenario, you have to not touch the stock. Only if it's the volume is going to pick up, like in this case scenario, when the volume is there and you have a chance to enter the position. That's the only way you enter the position. Otherwise, you shouldn't be doing anything with that. It's going to be a dead stock, you know, pharmaceutical company, until they're going to probably get some finance. Then only in that case scenario, they're going to move. FCL. Take a look. Very interesting scenario. Every single day, take a look. For the last 10 days, except a few days, the stock is trading at $1.35, the low, $1.35. Take a look, $1.35, $1.35, $1.35, $1.35 right here, $1.35 and $1.35. So there is a huge limit order sitting and buying the position, but you have to figure it out what's the reason he buys. He is buying just because he is a buyer, a long buyer, and he's accumulating with the limit position, or he is just a person who tried to support the level until then get out and somebody is going to sell it back to him. So you got to figure it out. So you have to know what's the next is going to be with this particular price, because a lot of times huge seller, that's what they do. They try to hold the stock for one simple reason. If somebody basically tried to buy, at one point those buyers are going to sell, and because of those sellers, they're going to generate the short move. So you have to figure it out what is going to be at least $1.35. We know one thing for a fact. We can basically put a stop below 133 or stop above 150 and sit and watch for this particular stock. FNBC, it's nothing there. I don't understand the position. I don't understand buyer and the seller. I mean, this is nothing I understand, so I'm not going to touch this particular stock. I wanted to let you know something. When I don't understand what's going on in the stock, I just don't touch it. If I don't understand the food or ingredients, I don't eat it. So if I don't understand a fight between buyer and the seller, the war between them, and who is winning, I'm not going to get into it. I'm only getting into the position that I understand and where the move is going to be. Color. If you remember, I said about the stock, even at $3 a share, the stock basically went up 500%. But the most important thing, what's the problem with this particular stock? Stock usually have two big moves. The first move usually, let's say it's up and down. In this case, it was up. And the second move is down, because you know where the energy is coming from. After the stock did the two significant moves, it's very hard to basically have a nice clean move after that. So basically in this particular stock, you're definitely going to figure it out what it's going to be with the stock. It's going to continue to move higher, or it's going to continue to move lower. So what I'm trying to do, I'm trying to always have first move and try to identify the first move where the energy is there and the stock is going to move. I showed this particular stock as well before, EKSO. It was very understandable where this move is coming from. Take a look. Stock went down a lot. If you remember, I said it about it when it was a false breakdown. I said if it's going to be false, it's going to go any lower. What's going on right now? Take a look. We had right here false breakout, you know, touched the low, and then stock came back. Very important thing, it's to understand what exactly you're going to do with this particular stock. What do we have right now? We have a definite level of 450. Most likely 99%, the stock is going to stop at 450 or have a false breakout for one simple reason. $250 to $450 a share, no stops at all. Nobody stopped this particular stock at 450. And you have to understand that the energy is not enough to continue to go further, especially have a big bar. So it's somewhere here. You have to be ready to basically short the stock, plus it's a moving average as well. My dear friends, as I said before, you know, I'm trying to give you very short presentation, but for you to understand. It's been Alexander Gerchik. Thank you very much. Gerchik Co Company. Make money with us, trade with us, and be happy. Thank you again, and watch out for the stocks. Thank you.